What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 18th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we got to talk about Bitcoin's continued surge to the upside, breaking as high as $18,500 and now coming back to around $18,000 in price. And along with that as well, talking about the macro cycle which we're going through right now, Bitcoin as an emerging store of value, and talk about what we really should be focusing on as we continue to see whether or not Bitcoin can serve as a hedge. We've got lots of things to discuss right after our quick sponsor. And our sponsor for today's episode is Ember Fund. Ember Fund is a cryptocurrency wallet that aims at helping you invest and trade like a hedge fund. They not only allow many one-tap solutions that instantly diversify your portfolio amongst many other digital assets, but they recently launched their Quant portfolio, which gives you the ability to automatically put your Bitcoin up for automatic trades in and out of the market to hopefully increase your Bitcoin position in the long run. Many products and more like this can be found in Ember Fund. So if you're interested, check out the link down below in the description to learn more. Alrighty, everyone. So quickly taking a look here over the market over the last 24 hours before we dive into Bitcoin, we can see there's a good amount of cryptos that are up in the green right now. However, the vast majority are not keeping up with Bitcoin here. Bitcoin is steadily leading the vast majority of the market, and some plays are even in red territory as we've started to see Bitcoin really steal the show and liquidity surge back to the large cap crypto itself. So I want to go ahead, dive into the chart here. Markets are quite volatile here at the moment. This is taking a look at the hourly charts here, and we can see that we peaked out around 18,500, just right below that level. And afterwards, after going to that big even level, we came back down and tested towards the low $17,000 range. And in 1 hour, we had one of our biggest surges of volume and one of our biggest 1 hour declines in the market for the last couple of days as we've been surging higher. So volatility is starting to increase here a bit. We're getting some rallies back upwards, but we're also starting to see a bit starker corrections than we did before. So I want to go ahead and explain why this is happening on the short term and then really dive into the longer term perspective. So the first reason we're seeing this here is we're getting very, very close to 20K. The closer you get up to 20K, you're going to have a larger and larger number of people who had bought or kind of FOMO'd in back during the 18K to 20K price range when retail was at its peak back in 2017. You're going to have a lot of those people who are now in the profit or back at break even in this case. And this causes a psychological sell level. A lot of people would be asking themselves, why is it that people are selling Bitcoin right when it's about to retest its all-time highs? Don't they know it's probably going to soon thereafter break out above those all-time highs? Yeah, it would make logical sense. But a lot of people either A, aren't traders, or B, are basically trapped in that mindset of getting back the money they put into it and holding on to that investment. Many people know, obviously, in crypto, it is accustomed to hodl this asset. That's the whole term, hodling or holding, right? So again, that's why in this case you have, especially this kind of parabolic asset like Bitcoin, which is going to be retesting back to these very critical all-time highs. We're really not far away from reaching that level. And again, in this case, people taking some kind of profit. So taking a look at the daily, this is the kind of correction we were talking about where basically over maybe the rest of today or tomorrow, we might start to see a bit of a fade here and a retest of maybe a lower level of support, such as, 17,000 in this case, coming back down to the even level, or 16K as we had a bit more consolidation back here. And it would give us some room to pull back and then kick up here into high gear in early Q1 of 2021. I really don't think that this correction, if we were to have one, is going to last very long. So I'm very, very excited to see how it plays out. Now, again, talking about these topics here, guys, obviously big price levels here. Again, a lot of people are wondering about the correction here. As we talked about, one of the critical things to understand as one of the value points here is that Bitcoin was getting towards a point where people are break even, and outside of that as well, we have a lot of critical things to keep in mind. Along with that as well, you get some just worries of investors as we go towards previous resistance. But one thing I want to talk about here is that's the short term. We've talked about a potential correction. We've been kind of calling for Bitcoin to get close to these levels, these previous 20K all-time highs, sometime in Q1 of 2021. But I want to go ahead and talk a bit about the macro picture. Dan Tapiero, who I follow on Twitter, is a really good guy. Much like Rob Paul and stuff, they're always posting good photos from the Bloomberg terminal, just showcasing like the macro charts. And the ironic thing is that whereas a lot of people who are maybe trading actively in crypto or stocks, they try to convince you need a dozen different indicators. You really don't need much here. You really just need a wedge, basic support and resistance lines, and if anything, some moving averages. And what Dan is showing here is just the beauty of the long-term chart for Bitcoin. We've got our all-time peaks here in 2017. We had a lower point of resistance here, lower point of resistance against that line, and we finally broke above it and did exactly what gold did back in 2018, which was to come down, make that line of resistance new support, and come up here towards relative all-time highs. I'm so excited to see how this continues to play out, guys. But there's something I want to emphasize here in regards to not only Dan and many people starting to spot this price action and speak to the beauty of it here, because this is the exact same kind of chart we saw. It's very similar to what we saw back in 2013, going up towards 2016, as we came from the all-time highs, went down to $200, and went back up to $1,100 to break those all-time highs, and then 20x Bitcoin's price from that point on. What I want to talk about is the distinction that I think a lot of people struggle to understand, and that is that we see all these big catalyst stories. We see PayPal, in this case, coming out and saying that they're going to allow the ability to purchase cryptocurrencies. We see Square making $50 million purchases of Bitcoin. We see MicroStrategy, entire mid-sized companies converting their balance sheet over towards Bitcoin. A lot of different things. Grayscale reaching mass new levels of demand. Now, a lot of people are going to look at these stories and think this is what is driving Bitcoin's price. And I would say to a degree. I mean, to be fair, there is speculation. When you hear big names, yes, it gets some people excited. It builds brand recognition. But the core reason is not simply because of why Bitcoin's price is moving the way it is because these companies are doing what they're doing. The critical reason why Bitcoin's price is moving the way that it is, and why we're seeing these companies do the things that they're doing, is they're preparing for the next macro cycle, the big shift when it comes to our traditional financial system. We've been talking about this for the last 2 years. It's been a culmination moment where finally Bitcoin has the positioning on a macro stage to be able to stand out as an alternative asset. Right? Gold, silver look relatively exhausted right now. People are looking for something that has a bit of risk appetite, but is also seen as an emerging store of value that's not correlated to any traditional metrics or world aspects or elements. Look at the central bank balance sheets, right? Just taking a look here at this, if you were to imagine this, for example, these central bank balance sheets, which are the trillions of dollars of assets that central banks have acquired, whether it's government bonds, in the case of the Fed, U.S. Treasuries, different types of debt, mortgage-backed securities, etc. The red line here is the Fed. If I were to look at this as a stock chart, coming back to these relative all-time highs, we didn't have a pullback here. We came right back up. What does it look like the Fed's going to do? They're going to start picking stuff back up very, very soon. ECB didn't even stop. It's continuing to set monthly all-time highs. Take a look at the Bank of Japan. Continue to surge higher. And whereas we thought China might be one of the exceptions, China's starting to cuss back up and retest to those all-time highs on its central bank balance sheet. And it's got a lot of room to grow. It's not stopping here, guys. Central bank balance sheets have continued to grow over the last few months, ever since we had the major surge back in the beginning of 2021 in March. And it's not just the mass printing of money that's applying pressure to assets like equities and properties, as well as alternative assets and hedges such as Bitcoin, Ethereum, gold and silver, and Litecoin. But along with that, we have negative interest rates becoming an absolute reality across the world. And there's twofold things that you need to consider when you're talking about this topic of negative interest rates. You have negative interest rates where central banks openly are, in this case, penalizing depositors in this case, right? In this case, you have a negative pressure on holding the currency. But along with that as well, you've got a secondary factor, which is considering inflation. So first off here, let's just take a look at the surface level. What people can clearly see and what central banks are openly stating are their current central bank rates, equivalent to the federal funds rate. We can see here, for example, in the UK, 0.1% here for the average rate here. The interest rate in America, 0.25%, right on the verge here of negative interest rates. And we've also heard the UK openly state that they're considering chartering into negative interest rate territory. Canada down at 0.25%, just like the US. Along with that as well, China, one of the fewest, healthiest rates, but in this case declining with the world stage. And as you go through a lot of the independent European rates, or specifically European rates, you can see here the Denmark rate, 0.05%. The ECB, 0%, flat. No interest whatsoever, right on the verge of negative interest rate territory. The Israeli interest rate, 0.1%. The Japanese interest rate, negative 0.1%. Japan's been charting a negative territory for a long time. They're kind of ahead of the world when it comes to this monetary experiment. Switzerland, almost down to negative 1%. You don't need me to tell you this, guys. This looks bad on the surface, but it gets worse when you dive a bit deeper. When you look at the real negative interest rate, adjusting for inflation. And as we scroll throughout this list here, guys, we can see a variety of countries that are not looking good. One of them being the United States, minus 2%. So when you consider these macro elements going on, these are the big picture things. One of the things that was stated in this article, and I'll see if I can find it here, that I think is really critical. It might not be here in this specific Cointelegraph article or CoinDesk article, but one of the things that I think is very critical that people don't consider is that at the end of the day, the biggest driver here for Bitcoin as an asset, the reason why institutions are going to be inevitably buying Bitcoin, is once we get above that 20K level, once we've started to substantiate Bitcoin as an alternative hedge, we have an opportunity for Bitcoin to serve as an asset that can help people opt out of that system. Where, sure, Bitcoin doesn't pay a yield, but it's not penalizing you. And along with that as well, it's not printed into oblivion. It's the real negative pressure that comes from both interest rates and inflation that make people not want to own either government bonds or currency. And Bitcoin has a real opportunity to help trillions of dollars of valuation that's currently ready to move somewhere else into a new asset class, where it can finally preserve its wealth and probably have a substantial opportunity to grow. As many people in this space, like myself, are calling for Bitcoin to go towards around $100,000 to $200,000 in this cycle alone. It's a much lower multiple than what we've seen before in Bitcoin's price. We'll see, though. I'm interested to join in that journey with you all. It's been such a privilege to be here over the last few years with you guys. And if you're interested in getting started in all of this, you can always check out a startup I've been working on, which is Digifox. It's an all-in-one cryptocurrency application. You can buy cryptocurrencies. Soon, we're going to be having support for Bitcoin and many other crypto assets, but we've got Ethereum and a variety of different cryptocurrencies out there on the market, as well as the ability to earn substantial rates of interest where you can hedge against both those negative interest rates and the actual inflation rate in the United States. So we've got lots of things to discuss over the coming weeks, guys. We've got an altcoin video coming up. We've got all types of things to discuss going into the next few weeks. But above all, I hope you all are enjoying this cycle as much as I am. It's going to get really exciting here much sooner than I think we can intend for, and I'll be here throughout the entire journey. Take care, everyone, and have a great day wherever you are. Stay tuned.